Welcome to Forbidden News. I'm your host, Gary Bai. Happy Friday. Now, talking about opportunism, what one would call a disaster in Ukraine may present opportunities that some regimes around the world will want to leverage, particularly those with predatory schemes. Yet, perhaps the same can be said for Western powers, and one opportunity in the world of money may be presenting itself. In our story today, we talk about an unprecedented moment in the world of finances, the consequences of which have a great deal of significance, or could have a great deal of significance on the Chinese Communist Party's ambitions to dominate the global market. We're joined by Dr. Chris Balding, economist and former professor at the Peking University HSBC Business School. Professor, great to have you with us today.
Thanks for having me, Gary.
So, a scheme that we'll go back to is how the Chinese Communist Party is bending the rules. Now, you've spent quite a bit of time teaching business in China, so maybe we will maybe give us an idea of how that works when it comes to going around the rules when doing business under the communist regime.
So one of the things that I think is so interesting about studying the Chinese economy and financial markets is in a lot of Western markets, we expect the rules to maybe be bent sometimes, or but I think most people generally, and you see this in throughout how people live their lives, we generally actually adhere just as a normal course of business to the rules. Whereas in China, it's almost a surprise if people adhere to the rules. So when we talk about the rules of business in China, I think it's very much more important to look at how firms and how the state behaves with regards to business rather than what the specific rules are. And, a joke that I always make to people is you would be much better served to understand how the Chinese business environment works by watching mob movies than combing through Chinese law books. That is much more realistic understanding of how Chinese business works.
So we're here to talk about a related topic, but it's perhaps the most important thing that couple the United States and China together. And it could be the cause for decoupling, which is money. But on this note, I want to start with an interesting story that some in the finance world would call disturbing. On March 8th, the price of nickel doubled in an hour, and the London Metal Exchange halted trading in response. This move was almost seen as unprecedented and appeared to favor a certain player over others. Now, you've been following this quite closely, so give us an overview of what you saw happen.
Sure. So basically, what had happened is a very large nickel miner in China had been taking a very large, what we call short position, meaning that he was betting on the price of nickel falling. And this was well known throughout the nickel markets. And so basically, people began purchasing higher levels of nickel. And so around the time that there was a contractually obligated requirement to deliver physical amounts of metal, this is when the price of nickel started spiking in what we call a short squeeze, because there simply was not enough physical nickel available for delivery. And so people were piling into the market, pushing the price higher. And this is what caused the price to spike very, very rapidly in such a short period of time. Now, where it becomes deeply problematic is during this time, the London Metals Exchange, which is owned by the Hong Kong Stock Exchange, which is owned by, it's basically controlled by the Hong Kong city government, who is run by the CCP, basically has shut down trading almost every day since. There's been small amounts of trading. And not only that, they went back and undid a significant number of trades, and even trades that have taken place since then. They've gone back and canceled those trades. And so this basically seems very, very clear that the London Metals Exchange, basically at the behest of the CCP, is basically manipulating the market to protect a specific player. We generally accept that in markets, some people will make money, some people will lose money, but it becomes deeply problematic when markets are so obviously protecting certain players in a market and causing others to lose money. It's kind of like if the referee of a soccer game or a basketball game was choosing who would win or lose the game. That is, the market players are market referees. The markets themselves are supposed to be agnostic with regards to who wins and loses. And so this is deeply problematic when you think of the CCP basically owning markets in open democracies where this is not taking place. There's the old joke that that Chinese markets work upon the principle of heads I win, tails you lose, and that seems to be happening here.
And so, on the building on the coin reference, they're kind of two sides of the coin, right? One, actual honest investors would choose to stay away, you would say, from a market like this one, but the other one, could this be some sort of a normalization of this behavior?
It's going to be very, very interesting to see what happens going forward when you talk about if this behavior will become normalized. The banks and traders themselves have already gathered their lawyers, and if litigation hasn't already been filed, I'm expecting litigation will be filed, because there are billions of dollars in profits that were that some companies were going to receive that they're not going to receive now because the market stepped in and canceled the trades. So it's going to be very, very interesting, the response of traders to where they choose to take their business. Um, Markets are relatively easy to set up, especially in today's day and age. Chicago does a lot of commodities trading. New York does commodities trading. London had somewhat of a specialized niche in commodities trading, but it was very, very lucrative and very, very sizable and liquid. So more important, and it's simply too soon to tell, is how market players will react. Will they go to other venues, or will they stay in London? It'd be very easy to say that they're going to switch, but we also see examples throughout history where there's some type of catastrophic event like this, and 6 months later, it's as if nobody remembered what happened.
Can you give us an example of this?
Sure. So, the most obvious example would be sovereign debt defaults, in the sense of, I forget how many, but the example that you use in the sovereign debt defaults is Argentina has defaulted on its sovereign debt. I forget how many times, but almost like clockwork, with such regularity, and yet they're a couple of years later they're able to go back to the sovereign debt markets and borrow money again. So it's simply going to be, how do markets respond? It's very, very possible New York and Chicago see a real opening and say, let's take advantage of this. Let's go take business from London, and people are so fed up and so worried about the reliability of the London market that they do go elsewhere. But that's simply too soon to tell for sure.
Right. So there is a possibility then the market would just essentially play along with this kind of behavior.
Yes, absolutely. Think of it this way. These firms that are trading in London, they are still going to want or need to trade. Okay? That still is going to have to happen. So where are they going to trade? There has to be a venue for that. So this is clearly an opening for Chicago or New York, would be the two most obvious examples. But again, it's going to be, do those firms make a play for London business? How deep is the resentment in London towards the London Metals Exchange?
Right. And going back to China, so its financial holdings in markets around the world is disproportionately small, at least on paper, compared to its economic size. And some observe that it's trying to expand its influence. With the, for example, with the Hong Kong exchange's attempt to purchase the London Stock Exchange in 2019, albeit, it failed to do so. So do you think this would hinder the progress?
Yes, absolutely. Because this is, a lot of people, I suspect, simply hadn't considered that China would come in and basically just shut down a market, a financial market, outside of China. This had, similar things had taken place in China before, but I don't think anybody had ever conceived that China would behave in such a manner, controlling markets outside of China. And so I think to a degree, this has been a significant wake up call. And I suspect that it's going to be very, very hard for London to come back from that loss of credibility. But again, I think it's at the same time, I think it's way too soon to make any broad sweeping generalizations.
Because the reason I wanted to touch on this story is that I think there's somewhat of a contradictory dichotomy that underlies the way CCP operates. In that one hand, it kind of seeks to earn more foreign capital by working closer with the Western market. But on the other hand, the regime is by nature manipulative and seeks to deepen its control. What are your thoughts on this?
I think that's very accurate. If we look at the London Metals Exchange example, I think Hong Kong purchasing the London Metals Exchange was seen as a good business decision by London, and the CCP was seen as basically a distant relative of anything that was going on with the Hong Kong Stock Exchange. Now people are looking at that deal much, much closer, saying, wait a minute, what exactly happened here? Why does the CCP get a role in dictating what days the market is open and what trades get executed? And so when you talk about that underlying perniciousness and that manipulative quiet nature, I think that is exactly what has happened with London. And a lot of people are taking a second look, not just at that, but at a lot of other things, because this is such a stark example of how the CCP operates.
And too many, this would seem almost counterintuitive or counterproductive. Do you see an inherent reason for this that's embedded within the Chinese communist system, or the mentality of the leadership of the system that would help explain this apparent paradox?
So basically, they are very aware that people or institutions that partner directly with the CCP, that is going to raise red flags. However, this is why a lot of, for instance, donations that get made to universities, businesses that get purchased overseas are done through shell companies, are done through frontmen, are done through individuals with non-Chinese passports, so that money can still flow effectively from the CCP, but not be from the CCP. One of my first years of graduate school in economics, one of the points that was made by a professor is economics is the study of trade-offs. In everything you do, there is a trade-off. Okay. Maybe you have a really well-paying job, but that means you can't take this other really well-paying job. If you drive a Mercedes, you can't drive a BMW. Okay, you can't physically drive two cars at the same time. Okay, so even in good situations, there are always trade-offs. And so what we're seeing is that the CCP is exerting this control because they want a certain outcome, which is fine. But what happens is similar to the individual that says, I want to lose 10 pounds, but I want to keep eating donuts. Okay, they want their economy to do well, but they don't want to actually rein in the debt problem. Okay. Well, they can keep pushing enough debt so that their economy grows rapidly. That's a very plausible outcome. They cannot, simply by the laws of mathematics, have both a high growth economy and no debt growth. It's not going to happen. And so they are trying to engineer outcomes without actually facing the law of trade-offs that we have simply as part of the human condition.
That's a little bit similar to the Soviet Union, right?
Yes, in a way, because there is this idea, and a lot of governments do this. This is something that the U.S. government faces, but we have elections to kick people out that say no, these are things you need to pay attention to. But this is absolutely a problem, and the debt level in China specifically is reached a level where I simply don't know how they're going to do it. At some point there's going to be a correction on the Chinese economy, and I think it's going to be quite severe. if it does happen, or when it happens, because the debt level is now at such a level that they simply can't avoid a major correction from that. But that is the law of trade-offs, and they're going to push that as far down the road as possible.
Right, and I think you talked about this in one of the articles you wrote before. Behind the thoughts of Xi Jinping or the top leadership of the party, essentially because they saw the demise of Soviet Union for, as you mentioned, not reining in these market factors, and that's what they are thinking, right?
Yes, I mean one of the things is that, so first of all, they are terrified. I think Chairman Xi has made this very clear that basically they are terrified of any type of liberalization because they see liberalization as what caused the downfall of the Soviet Union in 1989. So their entire strategy is basically to do the opposite. But they're also faced off with another trade-off, that they've staked their entire credibility as leaders, as a governing body, around basically delivering for their people, delivering rapidly rising standard of living. And so I think they are also just as scared about not delivering that rising standard of living, and so they continue to pump debt. And I think they are internalizing this by assuming that no matter what debt problems come, they have the ability to solve those debt problems. I'm skeptical of that presumption.
Do you think investors would perceive this deepening control as a risk, Western investors?
I do think they are. I mean, but again, Western investors, we have this discussion almost every 6 months in China. Something happens and it's like, okay, now the Western investors are going to realize, what they've really signed up for. And it doesn't really change. So I'm very, very skeptical that, there's a lot of talk about this time, there's a lot of the audit reports are being, auditors are basically backing out of their auditing reports, refusing to certify them. And so there's talk about, well, this time the Western investors are going to understand. I really doubt that is the case. I suspect that, Western investors in China have an incredibly short memory, so that they will probably forget within a few months.
I mean, just to push that back on that a little bit, as we speak, we're kind of seeing capital flow out from China. Well, now the rate of which it hasn't reached pandemic levels. So, what do you think it's behind this outflow?
Well, I think there are two very, very significant differences between, the outflows. This is the outflows that we're seeing right now are primarily institutional investors that were invested in China because of A-share indexing. Okay, the previous outflows were Chinese citizens moving their money outside of China. So I do think there is a significant difference between the types of outflows that we're seeing these days, and so there's very, very different, very, very big differences. Those outflows that we're seeing now very well could be flooding back in, even in a month. The ones that we saw earlier, Chinese citizens move their money out of China, and that money has left China. It's gone. Okay, it's really not coming back for the most part. It's bought a house in Sydney or Vancouver or suburban Los Angeles. So I do think it's very important to distinguish between the types of outflows that we're seeing.
So you think this is this could be, or is likely more of a temporary thing rather than a trend, let's say?
I suspect as much, yes.
Do you see any impact based on what we've been talking about, either the LME fiasco or this outflow? Do you see any impact of this to the CCP's plans to internationalize the yuan, which is one of its major goals, I think, in terms of finance?
I don't think it has any impact on internationalizing the RMB, simply because the RMB is not internationalizing to begin with, and it's not going to internationalize anytime soon. I don't think the LME has any real impact on that process or decision.
So it's like, zero subtract zero is still, zero, basically.
Exactly. There's basically zero chance of the RMB internationalizing any time in the near future, and so the LME is has no impact on that decision.
Do you think the United States can leverage some of the lack of loss of confidence based on we would describe as a very important kind of moment in this China's interaction with Western market? Do you think there's anything the United States can leverage this moment in its financial or competition in general with China?
So basically, I think New York and Chicago are best poised to do that. They have commodities markets that I'm sure could roll out similar types of products. New York and Chicago, I mean, they have much better trading infrastructure, to be honest, than the LME. They have much greater liquidity for those types of things. There's a couple of unique reasons that market grew up in London. It's a lot of that trading is still done through what we call open pit, so it's not even electronic. So I do think if Chicago and New York wanted, and I suspect that I'm sure that there are groups of people within in Chicago and New York that are planning to try and say, okay, how do we get that business that are targeting that right now. What becomes of that is, as I've said, too soon to tell. But that would absolutely be the way to go about that.
So some would call this outflow as an indication that some of the Western investors in China are kind of waking up to the realities, to the political realities in that environment. From a cold-eyed financial perspective, is this the case or?
Not at the moment. Because look, you have bunches of firms that basically their auditing firms are refusing to sign off on their audits, and so institutional investors in index funds, they simply can't hold those companies anymore. Okay. And so indexes are probably dropping those companies. Other companies that are maybe holding those funds because they were in an index or something like that, they're dropping those companies. They're moving that money back to China because it's very formulaic. To be honest, it's something that you could probably set up on a complicated Excel spreadsheet. If those funds are effectively not having their audits done, they basically are uninvestable. Foreign investors have to drop those firms. I mean, there's probably very few circumstances where those funds, where those companies can continue to be held by international investors. As decoupling, I think it's still too soon to talk about that, generally speaking. Because I think the bigger question about financial decoupling is what is happening with the SEC. And China has been leaking stories that there's going to be an agreement struck with the SEC that allows them to keep their firms listed in the US. And Gensler yesterday, the head of the SEC, said there is no deal. It's not going to happen. And so that's really the number one issue when you talk about decoupling. I wouldn't say the number one issue, but probably that would be one of the two issues that you're looking at when you're talking financial decoupling. And I think that is probably still 2.5 years away. Basically, they've given some time back. They gave them a 3-year window. Like this is when you get kicked off the exchanges. And so that's the key issue there. And there's a long way to go on that. That's what I would put as the real, let's say, marker of decoupling. And so I think one of the things that, like Ukraine has really speeded up is a lot of companies are now looking at China going, wow, I actually do on multiple levels have a lot of political risk here in China. My supply chains. So I think you're seeing a lot of interest in moving supply chains to more reliable partners, whether that's Mexico, whether that's the United States, whether that's India or Vietnam. I do absolutely think there is a lot of interest in shifting supply chains to where they can be more, to more reliable partners.
Technicality that we talk about in the future actually looks like in terms of the psychology of decoupling, that people are actually, shifting towards that direction?
I mean, it has been going on for some time. Absolutely, it has been going on for some time. But I think it's over the past, and there's multiple reasons for this. But I think it has kind of maybe stalled. It's not shifting as rapidly as it could, for lack of a better term. But I think the interest in doing that is really picking back up with a lot of with a lot of what we're seeing in the Ukraine.
With that said, thank you very much, sir, for your time today, and hope to have you back sometime.
Absolutely. Hey, appreciate it, Gary.